So FRNT Financial is a publicly traded global digital asset specialist investment bank. So, that's a new segment that us and a handful of companies have really created in the space. The way to think about the easiest correlate I can draw is a specialty commodity investment bank, where they do they work with commodity firms to raise money for them. They do physical commodity trades. They do derivative structures for different institutional traders and all of that. And that's what we do at FRNT.
Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, I am very happy to have Stéphane Ouellette of FRNT Financial. He's the CEO and co-founder, and he's come on the show today to talk to us about how he left the traditional financial system and went head over heels into crypto. Stéphane, thanks for coming on the show, man. How are you today?
I'm very well. Since we last saw each other, the market's changed a lot. It's moved in the direction that we were expecting. I think that the tailwinds to the industry and the asset prices are unlike anything we've really seen before. So it's a very exciting time for the industry. It's a very busy time, but always can make time for Bitfinex and Ricardo.
Nice. Well, thank you. I appreciate you coming on. I guess the first big thing I want to talk about is the U.S. elections. It seemed like we were kind of in a fork in the road for the market, and people were thinking that a Kamala Harris presidency would have been bad for the crypto market. And we've seen the market's reaction since Trump's victory. Like, what kind of forecast do you have for the next 4 years of the Trump administration for the crypto market?
Yeah. So, coming into the election, we were trying to take, just because, our expertise is in digital asset markets and not necessarily calling elections, we were trying to take a relatively kind of agnostic stance on how the election turned out and more try to plan for different scenarios. And what our view was coming into the election was that, the trajectory of Bitcoin in particular had already been very well established by very strong macro trends. So that's namely the massive explosion of fiscal deficits all across the world. And at the same time, you get an interest rate, a global interest rate cycle. It's setting up for probably one of the most significant global devaluation fiat cycles ever. So from our perspective, the U.S. election was going to be short to midterm noise around the trajectory of the assets. If Harris were to get in, our feeling was that the markets would have been confused for a while because of how well ingrained that narrative that you just highlighted was. But ultimately, the macro trends would take over. But maybe you'd be a bump in the road. What we really thought a Trump presidency was going to be very strong for, and I think we'll double down on that now, is the industry and the builders. Because while the asset prices have been in a bull market for 2 years, the industry itself has had a really tough time. You haven't seen new participants. There's been a lot of uncertainty in what can and I can't do in the market. Like, our institutional client base has been very nervous about participating at all. And we felt, and now feel even more strongly, that that's all gone away. Our conversations with the clients that were curious about the industry but nervous to get in have now felt as though those nerves are gone. And what I would say is that now, coming out, as the dust has settled, coming out of the election, we're actually more bullish on the impact of Trump to asset prices in general than we would have been before the election. I mean, there's so many crypto proponents, and I would say people who are very interested in the intersection of cryptocurrency and traditional finance around his administration, like a Howard Lutnick, for example, that the concept of more corporates adding digital assets to their balance sheet, or maybe sovereigns starting to do that as well. I think you have to increase the likelihood of that. It's still a big lift, but in terms of just a marginal increase in likelihood, it really seems as though these kind of once far out theses are becoming more of a potential reality in the medium to longer term, I would say.
Yeah, I would agree. And I mean, since MicroStrategy has had so much success by adding a Bitcoin treasury to their balance sheet, we've seen that other telecommunications company in Japan follow suit. Tether's been following suit. I think those are the first few dominoes to fall in what's going to be a large chain reaction of companies scrambling to accumulate some Bitcoin for their bottom line.
And I'd argue, and I also say that there's a very elevated level of cash among some of the largest tech companies right now, and there's been a huge push among some groups of shareholders in terms of what to do with that cash. Like, there's a really important, it's likely to not pass in terms of Microsoft, adding Bitcoin to their balance sheet. That's a vote happening later in the month. It's been pushed by a group of shareholders. But it's kind of turning into a virtuous cycle where it feels as though some very important kind of, US based technology company is likely to make this move to some degree. And if not, Saylor's ready to soak it all up if he's the only one that's still going to do it.
And what do you think about the prospects of like a strategic Bitcoin reserve for the United States or other nation states? We've seen Bukele has had great success with his Bitcoin accumulation plan. He's like now up hundreds of millions of dollars.
Yeah, I mean, everyone who was an idiot about a year and a half ago is now seen as a genius. I mean, it's just amazing how these how things change, and how, the mainstream media that covers them has no humility. They were writing articles about how dumb they were a year and a half ago, and now they're geniuses. It's a lot of pressure on a CEO or a sovereign in a similar situation as El Salvador was, and with some of the macro trends, and maybe don't get into too much here, but the macro trends suggest that these, South American economies and other kind of, more emerging markets are looking at a lot of inflation going forward. And the pressure to do these things, especially as the asset continues to rally, I think just mounts more and more every day. So, there's now that you have the US also likely to pull the rest of the world into a more positive Bitcoin stance. I mean, it's amazing how fast the sentiment has changed. I 3 weeks ago, these conversations would seem far-fetched, and now they seem like it's almost bound to happen at some point, that another country makes a similar decision as El Salvador, that a major corporate starts to at least add Bitcoin to their balance sheet. And from the US perspective, our stance on this is that this isn't actually that big a deal for the US. The US could actually start to build a strategic reserve by just not selling seized Bitcoin assets. So seized Bitcoin. So, the US, seizes plenty of Bitcoin every year, and their policy has been to sell it at auction. And if they stop doing that, I mean, that in itself would be the first step to doing a strategic Bitcoin reserve. And we've seen other, senators, put together more serious proposals that I think would be more controversial. But it's, if you take that step in the direction and just make it a policy not to sell Bitcoin, which I don't think is super controversial because it's been deemed a commodity by the CFTC. I'm not, that U.S. Congressional law isn't my strong suit, but just intuitively, it seems as though that isn't such a stretch. And then, one thing leads to the other, and before you know it, we potentially are seeing purchases like that. But I mean, you don't need the U.S. government to do it to make a big dent. If smaller nations tried to do that as a way to kind of, jump ahead in terms of their prosperity, that would be, a huge marginal buyer to the Bitcoin market.
Yeah, I would agree completely. Stéphane, I want to talk about FRNT Financial. For those that don't know, like, what is it that you guys do?
Yeah. So FRNT Financial is a publicly traded global digital asset specialist investment bank. So, that's a new segment that us and, a handful of companies have really created in the space. The way to think about the easiest correlate I can draw is a specialty commodity investment bank, where they work with commodity firms to raise money for them. They do physical commodity trades. They do derivative structures for different institutional traders and all of that. And that's what we do at FRNT. So we have two well-defined segments. We have capital markets, which houses kind of our more transactional business lines. So that's OTC spot trading. That's derivatives. That's kind of commoditized derivatives. That's more kind of solutions-based derivative structures and different lending structures. We recently announced a partnership with BitGo, where over-collateralized lending is a major focus for us in this kind of market dynamic. And then we also have the advisory segment, where we advise digital asset companies on how they can raise money. Maybe they want to do it in an esoteric way, like raise money denominated in Bitcoin or with some kind of stablecoin style structure, whether it's a line of credit, et cetera. And these are all gaps that we're filling in terms of where the traditional investment banking sector doesn't have the expertise, the willingness, the infrastructure, or the regulatory clearance to enter these spaces. And so essentially we are viewing the institutional segment of the digital asset space as extremely underserved. And we've built our business to fit in all the nooks and crannies where crypto companies, crypto investors, generalist traders that want to move into digital assets are just not being serviced.
When we were talking in Lugano at the Plan B conference, you had kind of mentioned that you come from a traditional finance background. How did you make that journey over to digital assets?
Yeah, so I'm co-founder of a couple businesses that I've built together, a guy called Adam. And Adam and I started talking in 2013, actually. Adam is a very early crypto adopter. He is a 10-year-old dog called Satoshi Nakamoto. So that's you can't fake that one. That's the proof. And in 2013, Adam was very indoctrinated into the crypto markets. We both were originally from Toronto, which was a major hub for digital asset development at the time. Ethereum was founded there. There's a huge Bitcoin community there, and Adam was all in. And his thesis was that MT Gox was an existential risk to the digital asset market, that it was a black box. No one really knew what was going on there, and better platforms needed to evolve for trading. Coinbase had just launched about 6 months prior, with a lot of kind of very deep-pocketed Silicon Valley backers. And we wanted to do the same thing. Unfortunately, I guess, the MT Gox crisis kind of accelerated right in the middle of the capital raise. And so that idea never got off the ground. Adam and I came back to the table years later in the 2017 market cycle. I went back to my job as a equity and derivative sales and trading personnel in traditional finance. And in 2017, what brought us back to the market was the directional move was impressive, but what was particularly impressive from our perspective were the market inefficiencies. So, Adam and I initially created a hedge fund together where we capitalized on the arbitrage in digital assets, whether it's on the margin financing side. We were very early on the basis trades and perpetual swap arbitrages. And this is kind of a recognized segment in the space now. It's referred to as market neutral crypto trading strategies. We may have had the first fund that formally was created to trade those strategies. There's not a lot of data out on it, but we were at least very early in that. And at the same time, me coming from a sales background, the trades that I was seeing in digital assets that on a risk-adjusted return basis were just so much better than the trades I was pitching in the equity market. So the idea was I need to call my client base on these great trades. And so FRNT was created really initially, in that capital markets vein where we were going to create institutional sales around teaching hedge funds and my core client base really like how to put these trades on digital asset market. Our first business line was derivatives. We then kind of built, our other, and OTC spot trading services. We built the other services out of demand over the years. And it's brought us to this point where we have this, very full service investment banking operation that is really, and ultimately we were very early. We were very early in the market, but we bootstrapped the business. We grew with the business has raised, very little capital historically. It's really grown with revenue. So we think we're at a position now where we've built, the infrastructure that just like, people were saying that Saylor was an idiot a year ago and now he's a genius, where it's going to be like a light bulb from the investment banking community and go, oh yeah, like this is what we need to build. So, in the future, I think there's going to be many specialty digital asset investment banks. I think FRNT is just, the first or one of the first to do so. And we think that this market environment is very likely to have much more broad and sophistication out of institutional participants. And we're there to support them.
Nice. You've mentioned like kind of the aspect of these clients being underserved. Like what kind of clients are you typically dealing with FRNT?
So we deal with just very much like a traditional sell side firm in equity markets or other asset classes. We have, corporate clients that are, that either are, if you take an example, a Bitcoin miner that's trying to, maybe hedge forward exposure. They want some structured solution that gives them exactly the kind of exposure to the asset they want, given their operational needs. Maybe they want to raise assets. Maybe they want to, have someone help them find different, like hardware or just in general advise them on the best ways to go about their capital markets business. And then on the other side, we have the asset management, the asset managers, where that's a combination of us dealing with the smaller crypto native asset managers. But really what we're built to support are the generalist asset managers that aren't going to build full trading infrastructure for themselves. They're not going to, they have different frictions given their regulatory status in whether they can face certain entities and all of that. So, we like FRNT is a publicly traded company. We did a full IPO, which is the hard way to go public. We're FCA, our wholly owned subsidiary, FRNT UK, is FCA registered. We have North American registration. We've built this company to help new asset managers get into the space and do kind of, more sophisticated activities in particular than just kind of buying an ETF, let's say. So, those are the two kind of core client bases that we have, whether digital asset focused companies or digital asset traders, and particularly registered asset managers that need to operate with a specific type of counterparty. And then the last would be, there's still a very large network of high net worths. It's not the focus of our business, but it's been, the ultra high net worth side, the OGs, all these different names for these, longtime crypto holders have really been, the source of large trades in large ways in the past. I think that'll change in the future, but you couldn't ignore them and have been around for 6 years like we have.
So would it be fair to characterize you guys as like a white label solution for these companies and clients that are looking for the kind of infrastructure that you guys have created?
I would say a little bit different. So we're very hands-on, so really, and I think that there's a lot of that kind of platform-based support in the industry. It's the institutional side has really been an if you build it, they will come type service. We've really focused on hiring what I think are absolutely the best salespeople, the best, bankers in the industry that can do the hand-holding that these new entrants to the digital asset segment need. So ironically, I come from the equity world. The complaint that you get from clients in the equity world is there's too many brokers. They get called by too many people. They're all the same ideas. There's no differentiation. Well, ironically, in a new asset class like digital assets and Bitcoin, that these asset managers, they want the support. They need a partner. They need someone to help them, teach them how to operate in this industry. There's no one who does it outside of FRNT and, maybe one other firm, honestly, that's like globally, that is calling clients every day and saying, hey, this spread just emerged in the market. This is how I think you should trade it. We have a great merchant banking opportunity for you here. Oh, don't deal with this counterparty. They've had a bad reputation, like that kind of service. So we have a fantastic technology platform that, I think we don't get enough credit for, because I really think our lending, OTC trading, derivatives is best in class institutional service technology. But where we really excel is the client service side. That's which I think is a massive gap in the industry overall.
Why do you think that is?
I think it's hard. It's really hard. It's been way easier to like a lot of the industry has been, in Canadian, Wayne Gretzky had a great line, it's very applicable, that he doesn't go where the puck is, he goes where the puck's going. Well, the industry has really focused on where the puck is, which has been launching unregistered offshore platforms targeted at retail or kind of medium net worth people, and just kind of, building on platform AUM. In my job, I've got to go into hedge fund managers who are very smart, very sharky people, and try to convince them that the trade that I have is, one, safe, meets the regulatory standards, that I know what I'm talking about. We've got a very experienced team, which helps a lot, that have dealt with these people in other asset classes, and they can bring that credibility into digital assets. So that's really been the best way to kind of, build our team, people with 3 to 4 years in this industry, but 20 years in traditional finance, building client lists. But it's a really hard exercise. I mean, the conversations that when I was marketing, I marketed basis we had a basis structured product in 2019. Okay. And I was showing these firms in 2020, because it started to really expand, like 35% annualized basis, that was available in digital asset markets that we've seen and had been trading, like in different vehicles for ages. I was called a scammer. Like I had to stand, because it's so hard for them to differentiate who the scammer is from who's actually got the real trade. And you get grilled, and it's almost like you got to have something wrong with you to do this for as long as I have. Like you go, for the first in bear market, the first 3 years, everyone thought I was nuts. I was doing great in my prior role, and this was something that I felt really passionate about. I could use my finance skills in the Bitcoin industry, which is something that I think is a real greater good. I go to work every day using the skill sets that I have to go do something that I think is going to help the world. It's I love doing it, but like in 2019, 2020, like everyone thought I was insane to leave what I had to go and do this, right? And they told me. So it's been a really hard exercise in getting it. And you got to deal with regulators. Like getting FCA registered is not an easy thing to do. Doing an IPO, not an easy thing to do. But these are the kind of building blocks that you need to do when you're trying to go after institutions. And we've stuck with it to get to this point where we think we've got the business that's going to do really well and be able to be a really great partner to institutional investors in the coming market cycle. And we've stuck with it. So, hopefully we've gotten it right on the money here. And, FRNT will grow in importance as a firm globally.
With this cycle, so far, it seems like it's been driven by institutions and that retail hasn't participated so much as in past market cycles. Do you think that retail will come in like in a big FOMO wave at some point as Bitcoin price continues touching new all-time highs?
Yeah, so I'll turn that into a two-part question. First of all, I do think that the institutional, participation in crypto is something that it's gotten a lot very confusing, right? Like it's been like institutional led, as in BlackRock launched an ETF, so that's like it's institutional led. However, the buyers of the ETF are retail traders. So retail traders, I still think are the dominant force in this market, and institutions are really trying to figure out where do they fit into this space. Like most of the hedge funds that I cover don't really just buy, passive assets to hold. So, it's like, where do they fit in? Is it on the, like investing in the companies? Is it by trading basis? Is it by, doing different option strategies? So institutional participation, I think is just starting to poke its head up. What I would say, but to answer the second part of your question, if FOMO has begun, it just begun. I mean, it's shocking to me how little FOMO there is in the market. Like to have this level of good things happening to the digital asset space, and the tradition, and you're looking at like Google trend searches. Okay, prior to the election, searches for Bitcoin on Google globally were like bear market levels, and it's just ticked up. We're about at half of the level where we were when the Bitcoin ETFs were launched earlier in the year. So still, this is not an environment where your mom is calling you, asking you what they should do in digital assets, or your friends from high school and all of that. Those are the FOMO markets where, tokens get launched, one day and are trading at $1 billion the next. We are very, very far from that market environment. There's very little leverage in the market even. It's just starting to tick up. And we're already at 85,000 now, 87,000, 89,000, wherever. I haven't looked at the market for 10 minutes. Who knows where it is? This is setting up to be a market cycle unlike any we've ever seen before. It really is, in terms of its magnitude and its importance to the world. I think it's going to dwarf what we saw in 2021 in terms of the notional capital coming into the space. The staying power really, I think, it has a potential to be different this time. I don't know if we're going to have, as much of a boom bust cycle across the entire ecosystem as we did last time. But it's really just getting started. From everywhere we see, it's just getting started. You've never had a scenario where Bitcoin has like changed its direction with this little attention and this little leverage. Typically, it changes direction when everyone's into crypto and there's so much leverage, and every DeFi project is getting financed and all of that. We're a long way from that, and it bodes for like the legs in this move.
Do you feel that there's like a bifurcation happening right now between Bitcoin and other digital assets, as many Bitcoin maximalists have predicted?
I think there definitely is, but I don't know if it's going to stick around, because right now the market is still dominated. The Bitcoin market is still dominated by Bitcoin maximalists, or highly indoctrinated Bitcoin holders. Like the levels of unmoved Bitcoin are still at like over a year are still very high, right? And like in the kind of the peak hodler environment, 70% of Bitcoin was unmoved for a year. In 21, that was 30%. Right? Like that's when a speculative market has come in, and the incremental participant is a speculator who maybe doesn't have the same kind of differentiation that you're referring to, right? Like what typically happens in this market is that, and it's happened over the last two cycles, is that Bitcoin rallies, And then, you know, investors are looking at the Bitcoin chart and they go, wow, that's gone up a lot. I probably missed that one. What's next? And then they look at, you know, other large tokens like Ethereum and all of that. And then that breaks out. And then they go down the chain, and then they start looking at the equities, and the equities have, you know, bananas moves. And then people start coming up with their own tokens. And then before you know it, they're selling monkey pictures for $4 million a pop, you know? So, you know, that seems to be the path that we're on again here. And, you know, I'm a little concerned about how aggressive Trump seems to be in the DeFi space, because I think a lot of that's experimental. There's a lot of bad actors that have historically been attracted to those spaces. So you really have to keep an eye on fraud still, and all these kind of, you know, very well ingrained crimes. I mean, these aren't digital asset crimes; they're old school crimes. But you know, for now, there's a clear divide between Bitcoin and the crypto ecosystem. 9 months from now, you know, the incremental speculator may view them all as the same thing, and we may have one correlations again.
That makes sense. I think alt season is coming, and I don't think it's here yet. So that's my position on it.
Yeah, it's not here yet. I mean, you look at something like Dogecoin, right? Like Dogecoin is like, it's been on wheels the last couple of weeks, but I mean, it's still below 2021 highs. And, you know, if there was any time that like there was going to be a major development in Dogecoin, it's probably more likely to happen now with Elon's involvement in the US government and all of that. So, you know, there's a lot of room to run. We don't spend a lot of times outside of the top 10. It's not our bread and butter. There really isn't the liquidity in a lot of those assets, or the consistent liquidity in those assets for us to feel comfortable recommending structures to clients around it. Historically also had been really gray from a regulatory standpoint. So we've stayed away from it. We'll see how it all develops, you know?
Yeah. You mentioned NFTs and gorilla pictures selling for millions of dollars. Earlier in this market cycle, we saw a huge like meme coin push, and some of these hedge funds have been investing in these just fly by night pump and dump meme coins. Does FRNT stay away from that, or are you guys kind of dabbling around in meme coins as well?
No, we absolutely stay away from that. I mean, I've gotten in trouble like on other podcasts where I sound like I'm a, you know, hater of meme coins. You know, the meme coin development is a very interesting one from like a markets experimentation, thought experiment type perspective. I mean, I really do think it is. It really pushes the concept of why does a stock go up, like, to its extreme. And there's a whole bunch of other interesting developments around meme coins too, where, you know, like now not having a project is it actually, you know, so many of the DeFi projects just never came to be what they said, right? But what that does is it sets up this negative catalyst down the line of it doesn't work. When you have a meme coin, there's never this negative event where the thing doesn't work down the line. It's really just about, you know, selling to the next guy and all this kind of stuff, and a community, and, you know, everyone getting excited for whatever reason that they decide. So it's something that we don't ignore entirely in terms of an indicator or something that we're watching as like a future market development, or, you know, what does this mean for the future and all that. We talk about meme coins and stuff like that, but in terms of doing business around them, no. And to be honest, I get enough trouble selling an investor on a basis trade in Bitcoin, you know, let alone if I started coming in and started talking about meme coins the next second. I think that the crypto market doesn't do itself a lot of favors, because, you know, you have a successful DeFi platform. They've got a big segment of the retail market share. The next thing they say is institutions want DeFi because it supports their interest. Institutions are so like institutional investors in terms of, you know, having, you know, traditional institutional investors that are looking to space as another segment of all asset classes they trade. You know, most of them are very far away from looking at that stuff. You know, and so you don't want to, you know, if you've got someone that's willing to kind of dip their toes in, we tend to want to walk them through the more vanilla trades and then get more complicated as it goes and as their risk appetite increases, not just throw them a meme coin idea right away. So so the answer is kind of, it's, you know, it's not something we dismiss in terms of its market developments, but on the other hand, you know, it's not something that we do transactional business in, and it's not something that we advise clients on outside of it being some signal for a broader industry development.
Okay. Another narrative that we've heard getting kicked around a lot this market cycle has been this push towards tokenized securities and real world assets being tokenized. Like on that front, like what potential do you see?
Yeah, so there's been a lot of, blockchain, not Bitcoin, has been a very consistent, superficial talking point of people that have cognitive dissonance around Bitcoin becoming an important, asset, and this financial system continuing to evolve. So historically, I've been very negative on this kind of stuff, right? There's something that I would say is, there's talks about the New York Stock Exchange becoming a tokenized platform, right? And so, what I would respond to that is that I would say, I see a lot of need for decentralized, like censorship resistant currency in the world. I don't see a lot of people complaining about trading on the New York Stock Exchange, right? So the incremental benefit that you're getting from what would be a logistical nightmare, like if it's even possible to move in one go in terms to tokenize the New York Stock Exchange, the switching costs are way too high. However, I would say that that's more of a G7 developed markets issue. The reality is that in places like, certain South American countries, I mean, we were talking to a Colombian-based tokenized asset provider. I mean, they've got huge issues with ownership. I mean, there's constant, like with ownership verification, there's constant, disagreements in courts over whose land this is. There's malicious actors that try to claim the land is theirs. And blockchain it seems to be a better solution than their existing kind of proof of ownership mechanism, or at least something that's a lot, more sturdy than what they have, and tamper and more tamper proof. So, what I would say is that it seems to be have its best opportunity in these like tokenized real estate, for example, in these, or land ownership, like I was saying, in these emerging markets where they don't have a great system to switch off right now. So this system can be supportive to their existing, so when you go to court and you go, here's my deed for the land and here's the token that says I own it, it's probably better than if you just have the deed, right? So I think that, there could be some leapfrogging in terms of getting on better systems, because I think obviously tokenized systems, I don't need to tell your listeners, I'm sure that they can imagine that, tokenization and the securitization of like larger assets is something that unlocks a lot of financial potential. But I think that the emerging markets have a better chance of moving onto that because of the lower switching costs, because they already don't have, in places where they don't have good systems for proof of ownership, versus, developed markets that have very strong and well-ingrained systems already with a lot of special interests.
Okay. Thanks for your insight. My last question of the interview is, when we were speaking in Lugano, you'd mentioned that you had a history, a long history and relationship with Bitfinex and Tether. How does Bitfinex and Tether's products like fit into your business model?
Yeah. So, there's, I don't want to get in kind of the specific activity that we've done with Bitfinex and Tether over the years, but, what I will say is that, I consider Bitfinex and Tether two of the core, like, to be honest, they're really the core of the ecosystem for me. Like there was so much dissent around these two organizations over the years. And if you know the organization well, it just made no sense. Like I saw them go through their hack in 2016. I saw them deal with the issues they had around banking. They always dealt with it in an integrous way that supported their customers' interests. And all these new fly-by-night guys that were getting, held up in the last market cycle, like SBF was the biggest example. You've never even seen how we operated in a bear market when the tide comes in. I've seen the tide come in on Bitfinex and Tether many, many times, and they've always been able to withstand the storm. And in this space, that's as good as anything to be able to find strong counterparties, is track records and the way they've dealt with things when things have gone wrong. Because it's the tail risks in the space are such that it's very hard to tell what could go wrong. I mean, we're going to have issues in this bull market that me and you couldn't even, anticipate if we had 10 hours sitting here running through things. And it really happened. In the partners you want to be working with are ones that you have seen to have a track record of giving up their own interests to support their client interests, which is what Tether and Bitfinex have done time and time again. So I'm really proud of the team at Tether and Bitfinex, and as a Bitcoin, proponent, in terms of how they've weathered the storm, how they've come out of this. Good guys have really won in this case. And, to see some of their allies, and colleagues now, looking at getting roles in government is such a huge development from, this antagonistic relationship that the G7 pushed, or mainstream media pushed on Tether over the years. So, our organizations will continue to work with Tether and Bitfinex in whatever ways that the opportunity presents. We it's always trust but verify, but the Bitfinex and Tether guys are very high up our list in terms of their strength there.
Stéphane, the interview's coming to a close. How can people follow you on social media? How can they get a hold of FRNT if they want to become clients? Can you give out your social media information?
Yeah, so my Twitter is StephOFRNT. I'm also available on LinkedIn. I think the best place to go to learn more about the company is FRNT.io. We actually just relaunched our website, so it's nice. Very up to date, and there's plenty of the contact details there to reach out to different members of our team. We are publicly traded in Toronto under the ticker FRNT. We have a US OTC listing under FLF. We'd love to hear from everybody.
Indeed. Well, thank you so much again for coming on the show. It was great to talk to you, and I really appreciated your perspective on the market.
Thanks very much, Ricardo.